Well, good morning. Let's talk about interest rates. So I worked for Toyota and Sion back when Sion was still a brand. I've been certified for Chrysler, Dodge, Jeep, Ram, Chevy, Buick, GMC, and even Cadillac for a little bit. Although my store I worked at ended up dropping Cadillac before, not too long after I got there. But I've worked for a lot of different brands and experienced the needs and the interest rates of a lot of different banks. So I'm hoping that my perspective and my experience and sharing that with you will be useful in your efforts in shopping for a car and trying to figure out what the heck your interest rate is going to look like. So let's talk about the past of interest rates. So I am making this video in January of 2024, and we are still living in a world where the events of 2020 are having a huge impact on the auto industry, banking, the American economy, and of course, interest rates. So what we saw when the pandemic first happened is a lot of the auto manufacturers got really nervous and they thought, oh my gosh, people aren't going to buy cars. They're going to have other things going on, and we're going to be facing a crisis of not having any customers. So what they did to react, and they did this proactively. They started dropping interest rates. So we saw the auto manufacturers buying down the rates or incentivizing the rates. So that wasn't a reflection of where interest rates were really at the time. That was a reflection of the auto manufacturers wanting to see inventory move. So essentially, with an incentivized rate, what the auto manufacturer is doing is paying down the amount that a customer pays to finance that car. So we saw a lot of that happening. We saw 0% on heavy duty trucks for a minute there. And we saw a lot of 2 and 3 and 1.9, 2.9, 3.9. If you had rough credit, 4.9 on a new car. So that was the reality. And that's the reality that people were buying cars in 2020, 2021. So a lot of people who got in at that time got in at really good rates. Now, on the flip side, what you saw happening is a lot of manufacturers, or not a lot of manufacturers, a lot of auto dealerships were selling their cars for more. So they were calling it a market adjustment, or sometimes it's referred to as a second sticker, but they were basically taking the price of the car and marking it up. So as a consumer, you were getting a great interest rate, but you're also paying a lot more for a vehicle because of limited inventory. So, dealers took advantage of that and they marked the price of their vehicles up, and the people buying those cars paid a lot more for them because the dealers knew that if you wanted that car, if you wanted that color and those options, that you probably didn't have anywhere else to find one. So they could make a little extra money off you, and they did. So a lot of people bought at low rates and high prices, and those are a lot of the cars that people are driving now. And like I said, that was 2020, 2021. I'm making this video in 2024, and what we know, Toyota knows this, banks know this, everyone in the auto industry knows this. I've sold lots of cars to people who said they're going to keep it for 10 years. Some of them do, but most people trade in their vehicles every 2 or 3 years. That's the industry average, and that's been true for at least the 10 years that I've been in and out of the automotive world. 2-3 years is the average amount of time that somebody keeps a car. I know if I look at my own car buying habits, that's true for me too. 2 or 3 years, probably closer to 2, not quite 3. So that's the reality of it. And what I'm seeing now, and what all of us are seeing now, is a lot of people are coming to trade in those cars, and they're in a tough spot because they paid high prices on them and they had low interest rates. And now prices are evened out, prices are fair, inventory's better, not great, but the interest rates are at all-time highs. So with interest rates being at all-time highs, people are smart. People know that. One of the questions I dread getting asked, and I probably get asked it almost every day from a customer, is what is my interest rate going to be if I buy this car? And why is a dreaded question is not only because I don't have good news to tell them, but because it's a really hard question to answer. So we still see incentivized rates, but not that often. Right now is a good example because we're in that period of time where we have some 2023 models left. We're getting into the 2024s. At least what I'm seeing from Toyota, when they are putting incentivized interest rates out there, they're putting them on the 2023s. And the reason for that is because they want to clear out the old inventory. Incentives are how, for lack of a better term, manufacturers manipulate the market. So they put the incentives on the ones they want to see move, and then the ones that they feel like they don't need to add that extra push to, like the new 2024 model year cars, they don't do that. So what is hard as a customer is you'll see incentivized rates advertised. Like I'll take the Venza, for example, the Toyota Venza. We have an incentivized rate on the 2023s. Toyota's putting that out there, and if you Google it, you're gonna see that. However, where I live in Northwest Montana, we sell a lot of all-wheel drive cars, a lot of SUVs. That's kind of our bread and butter. The hybrids are becoming more and more popular. Probably our biggest demand is for hybrid all-wheel drive vehicles. And what we're seeing is I don't have any 2023s left. So you're going to see that incentivized rate advertised online, but the reality is dealerships like mine don't have 2023s to sell you. So, yes, the incentivized rate exists, but you can't get it because those vehicles aren't left on the ground. So I have 2024s, I have them priced fairly and aggressively, but unfortunately, I don't have incentivized interest rates attached to them, which means we're looking at conventional financing, which is just a way of saying we have to send it into the bank and see what you're going to get. Now, we do have tools to predict that, so we can predict that. I ran payments for a customer the other day. She had great credit, and when I showed her the interest rate, showed her our estimates, she said, "Oh my gosh, Jordan, I think this is twice as high as the loan on the last car I bought." And I had to say, unfortunately, it probably is, because you bought your last car 3 years ago, you traded it in, and rates were great then, and they're not great now. So, I'm gonna do the best I can. I'm gonna get you a Toyota or a local credit union, and get you the best rate we can, because we want your business not only as a customer, but we want your financing business as well, and we want you to be happy with your purchase. So, we're gonna do everything we can for you, but the reality of the situation is that interest rates just aren't great. So what do we do about that? Well, when it comes to high rates, here is the good news. Every loan we do at Kalispell Toyota, and frankly, any other dealership I'm familiar with, is a simple interest loan. So what a simple interest loan means is there's no early payoff penalty. So that means, yes, if you're gonna buy a car today, you're gonna buy it at a better price, but a higher rate than you did 2 or 3 years ago. However, the thing about interest rates is that they're in flux all the time. They've been going up and up over the last couple years, but the Federal Reserve has signaled that they are going to start lowering interest rates this year. While it will not be immediate, we will see that affecting interest rates on everything we purchase, houses and cars included. So once those interest rates start going down, it means when you go in to buy a car, you're going to be offered better rates right out of the gate. But it also means if you've already paying for a vehicle, already financing a car, and you're financing it at one of those high rates, you're going to have the opportunity to refinance that. So because there is no early payoff penalty on a simple interest loan, it means you can pay it off or refinance it, and it's not going to cost you a bunch of money to do it. So one phrase I hear all the time from car salespeople to real estate agents to bankers all over the place is you are dating the rate, you are not married to it. And that's really the best way to sum it up. So interest rates, in some ways, yes, you're with them, but they're also not permanent. So auto loans today can almost always be refinanced, which is good for you as a consumer, because you don't have those worries. I hope this information was useful. Hope I didn't ramble too much. Thanks for watching. Please leave any questions or comments that you have. I'd love to make a follow-up video if I do get a lot of questions. Otherwise, I post a lot of car content on this channel, so please like and subscribe. I do walk-arounds. I'm going to talk more about the industry, history of different brands in the industry, and things like that. So I've got a lot of stuff planned. Please check it out. Thanks for watching. Have a great day. Thanks for watching this video. My name is Jordan Rendoni. I'm an internet manager and a product specialist at Kalispell Toyota. We are part of the Kalispell Auto Group, which includes Kalispell Ford, Kalispell Volkswagen, and of course, Kalispell Toyota. Other than, of course, common ownership, one thing that unites all of the dealerships within the auto group is that we all practice best price. Best price is not just marketing, it's truly a philosophy and a way of treating customers and dealing with people. This means that we give you our best price on every vehicle upfront and in writing without you having to ask, no matter who you are or what the situation is. One reason we do this is because we want to build relationships with our customers and with people in our community. And we think it's a lot easier to do that if everyone feels like they had a great experience working with us and didn't have to go through the normal hassle of buying a car. To give you further assurance that we're giving you the best price possible, we offer a 7-day return policy on every car we sell and a 30-day exchange on every pre-owned vehicle on the lot. We take pride in reconditioning our pre-owned vehicles because we want to make sure ours are the best available on the market. If you enjoyed this video, please share it with a friend and like and subscribe to see more.